Why money flows to the rich. This is an integral aspect of the wealth gap that exists in society and affects the distribution of riches. To unravel this mystery, we must examine the underlying economic systems, investment strategies, and financial behaviors that contribute to this flow of wealth. By understanding these factors, we can better comprehend the driving force behind money inequality and its impact on both the rich and the rest of the population. Welcome to Braylen AV. If you haven't yet, please like and subscribe. Number 1. Knowledge and education. A top-notch education plays a significant role in shaping one's future, especially when it comes to wealth accumulation. The rich are often more successful at channeling money towards themselves, thanks to the many advantages they gain through their world-class education. These advantages include an exposure to opportunities and the development of sophisticated financial skills. The power of an exceptional education serves as a catalyst for money to naturally flow in the direction of the affluent. Number 2. Wealth accumulation through inheritance. This phenomenon, often seen in affluent families, perpetuates economic inequality and makes it challenging for individuals with fewer resources to close the wealth gap. Inherited wealth provides already privileged people with additional financial security, enabling them to earn passive income and leverage better opportunities. Moreover, this process supports the consolidation of wealth within a few hands, further increasing the divide between the rich and the poor. Number 3. Networking and access to influential people. Networking and access to influential people are crucial factors in understanding why money flows to the rich. Building strong connections enables the affluent to create opportunities and expand their wealth further. These influentials often have access to resources and information that can significantly impact one's financial success. By tapping into this elite network, the wealthy are able to maintain and further accumulate their financial advantage. Number 4. Influence and power in politics and economy. This plays a significant role in shaping the distribution of wealth within societies. This undeniable connection often results in money flowing predominantly to the rich, further widening the wealth gap between them and the less fortunate. Factors such as political control, access to resources, and regulatory advantages heavily favor those who already possess significant financial means. The lower and middle classes find it increasingly challenging to break this cycle, as the accumulation of wealth continually gravitates toward the affluent. Number 5. Ability to take risks. Risk-taking, while intimidating for some, often leads to calculated decisions that result in substantial financial gains. The wealthy tend to have resources and the mindset to confront challenging situations and seize advantageous opportunities. By embracing risk, they not only amass wealth, but also contribute to economic growth, continually pushing the boundaries of financial success. Number 6. Can afford to build assets. In light of this, it becomes evident that those who can afford to build assets are often the ones who attract more financial opportunities. As they accumulate wealth, their ability to participate in profitable ventures expands, furthering the cycle of monetary growth. Consequently, the rich continue to amass wealth, perpetually widening the gap between themselves and those with fewer resources. Number 7. Lack of government regulation and oversight. When regulatory barriers are minimal or non-existent, it paves the way for those with significant resources to exploit any potential avenue for financial gain. This, in turn, establishes a system that inherently favors the wealthy while leaving those with limited means at a disadvantage. The absence of appropriate controls only exacerbates income inequality, further consolidating the wealth of the rich and deepening the divide between socioeconomic classes. Interested in starting a business to create wealth? Click the links in our description box below. Number 8. Opportunities to diversify their investments. By accessing various investment platforms, the wealthy can capitalize on emerging markets and innovative technologies, further increasing their wealth. This financial privilege often allows them to take larger risks with the potential for significant returns. Additionally, a diverse investment portfolio serves as a safeguard against potential economic downturns, ensuring the continued growth of their assets. Number 9. availability of credit, and loans with favorable terms. This observation can be attributed to the fact that the rich often have a more robust financial standing and credit history, enabling them to secure loans with lower interest rates and more favorable repayment terms. This attracts a continuous influx of capital towards those who are already financially well off, potentially widening the wealth gap further. As a result, this dynamic illustrates a critical aspect of modern financial systems and contributes to the growing discussions surrounding wealth inequality. Number 10. More access to opportunities. Access to resources and opportunities plays a crucial role in the accumulation of wealth for the rich. The wealthy tend to have more connections and resources at their disposal, enabling them to capitalize on lucrative ventures. This advantage creates a cycle of wealth accumulation that allows them to further expand their financial reach. As a result, money continues to flow toward the rich, further solidifying their positions of power and influence. Number 11. Business ownership and entrepreneurship. These avenues allow those with existing wealth to invest in new ventures, further expanding their financial resources. This creates a cycle in which they are able to generate more wealth and capitalize on opportunities, which in turn helps consolidate their position within the economic hierarchy. As a result, the rich continue to accumulate wealth and maintain their access to resources. Number 12. Leverage and resources to hire plenty of assistance. Building on this foundation of wealth, the rich and corporations can strategically expand their influence and power. By actively engaging a network of skilled professionals, these wealthy entities can capitalize on innovative opportunities and effectively navigate the ever-changing global market. This cycle of utilizing resources to generate even more wealth and access further cements the financial divide. Number 13. Ability to take advantage of tax benefits. As tax laws continue to evolve, those with wealth have increasingly found ways to benefit from the intricacies of the system. This ability to take advantage of tax benefits is a primary driver behind the concentration of wealth among the rich. Through careful financial planning and strategy, these individuals and entities can reduce their tax liabilities and retain more of their income. As a result, the gap between the rich and the poor continues to widen, with the rich accumulating wealth at a faster rate than the general population. Number 14. Systemic advantages and privileges. In many societies, this can be traced back to historical factors that have disproportionately favored certain groups over others. This has led to the creation of a self-sustaining cycle, where those with wealth continue to amass more resources and opportunities at the expense of the less fortunate. These factors create an environment in which the wealthy are more likely to accumulate even greater resources, ultimately contributing to economic disparities. Inequalities can be perpetuated by various mechanisms. By understanding these dynamics, it is crucial to address the root causes of wealth concentration and implement policies that promote a more equitable society.